What's going on, everyone? Long time no see. I haven't posted a YouTube video in quite some time, obviously. And yeah, man, I had a few things to take care of, completely not trading related. And they are taken care of. So let's hope I don't run into any more skunks or viruses. So yeah, man, let's hope that the next month will be very, very, very uneventful. I'll just be sitting at home, not doing anything, and just focusing on trading. So hopefully we could do that. All right. So yeah, man, there's a lot to talk about. Clearly, we have just started to make a really, really nasty downturn on the entire market. And I'm going to talk about specifically, there has been historically a chance that we rally next week. But then I'm going to talk about the chances of that not happening, why I do think that could happen, etc., etc. I'm going to talk about the next steps that need to happen moving forward. And yeah, man. So I missed doing this. I miss sharing and seeing you guys and talking to you guys. So yeah, man, let's get started with the video. And of course, thank you guys so much for all of your support, your likes, your comments, subscribes. It's very humbling and it's amazing that you guys support in the way that you guys do. I cannot even begin to thank you guys. This is really, really amazing. So next week is going to be very, very important. So the main thing, so obviously on Monday we have the PMI numbers coming out, and then we have on Wednesday the very, very, very important FOMC meeting at 2 o'clock. Now, what I think is going to end up happening now. So on Monday, here's a few things that I think could happen. So number one, we can see that the SPY is trading outside of the lower level of the Bollinger Band. Very simply, if on Monday the SPY opens outside of the lower Bollinger Band, once again, it's going to be a very, very easy day of just accumulating calls and going long. We did that on Monday. I had the best trading day of the year. And this week, actually, whatever, coulda, shoulda, woulda, coulda. But Monday was the best trading day of the year so far for me. And we just followed that Bollinger Band tactic and it worked out beautifully. So now moving forward, what I'm looking for is on Monday, if we can open outside of the lower Bollinger Band. So what I'm hoping for is if we can continue falling dramatically red on Monday. That would be spectacular because then it would make everyone extremely bearish. And for example, if we were to open below 410 or, you know, down here outside of the lower Bollinger Band, everyone would become very, very bearish. And that would be an amazing opportunity to rip everyone to the upside. Because currently what's been happening on the market is no matter how dramatic the fall has been, the bounces have been pretty strong as well intraday, but they're not sustained. So basically, we're going to be looking for a bounce to levels of resistance for a better shorting opportunity. And yeah, I mean, currently what we saw is that even on Friday, what we saw on these huge red days is that we are completely falling, but we aren't magnetizing back up to any key levels of resistance to load back up on shorts. They're making it very, very difficult for people to get into puts at a good risk reward ratio because, for example, when the market fell below 420 on the SPY, you know, it was just very, very difficult for people assumed that we were going to retest back up to like 421 or 422. When it fell back below like 415, people assumed that it would retest back to like an upper level of resistance. That never happened. It just kept on really like just dying and falling lower. So to make it short, I'm looking for a very hard overextension to the downside on Monday. If that doesn't happen, what I want to show you guys is weekly charts of the SPY, not a monthly, a weekly. What we can see right now is the SPY has 4 red weeks. 1, 2, 3, 4 red trading weeks. That is very, very historically dramatic because that almost never ever happens. And I'm going to go ahead and show you guys now the last few times that that's happened. So we have, so basically what I'm trying to show is that when you have 4 red trading weeks, historically, the 5th trading week should end up green. And now I'm going to show you guys the instances in which where we didn't bounce green the 5th week. And then we're going to compare the market dynamics to those times. All right, so we have 4 red trading weeks. History and statistics are showing that we should have a bounce. But now the times that we didn't have a bounce is, number one, back here during the COVID crash, we had 1, 2, 3, 4, 5 red trading weeks. And then a huge green bounce, obviously. Let's go back even further. Back here at the end of 2008, we had 1, 2, 3, 4, 5 red trading weeks as well. And then the 5th week was a bounce. And then over here at the, during the end of 08, again, 1, 2, 3, 4, 5, 6. You had 6 red trading weeks and then a bounce. And then, of course, the .com bubble. We had at the beginning of 01, we had 1, 2, 3, 4, 5, 6, 7, 8 red trading weeks, and then it was green. And then at the end of 2000, 1, 2, 3, 4, 5, 6. So we can see historically that not every single time we have 4 red trading weeks is an automatic chance that we bounce. But statistics are telling us that when we do have that dramatic of a drop, so currently we're down about 10%. Those last few times have been at least 10 to 15%. But you also have to take into consideration that they were multi-week red days. And then what we also see is that they happen at the beginning of dramatic downturns. So it's not an automatic surefire hit that we're going to start completely bouncing up right from the beginning of next week. But statistics are showing that next week should be a green week. Unless, so now basically, if we have more than 5 red weeks, if next week is red as well, this should be the beginning of a really, really tumultuous, terrible time in the market moving forward. We already can see that. We already have like the inclinations of that from policy, from inflation, from the fact that the large tech stocks couldn't even have proper earnings. Apple didn't even want to report guidance. So a lot is clearly not really good for the market at the moment. So, but next week, if we have a red week, that's going to be really, really bad, in my opinion. So let's go ahead and just continue to see what is going to happen. Let's look back at the daily. So we have clear support now on the daily down here at 411. The technicals, everything is showing so much weakness. Clearly, you can see the MACD is moving upwards, yet the SPY is falling, which tells you one thing. It means that the market is going to continue falling. If 411 breaks, we're gonna end up seeing 400. 400 to 405. Those are the main levels of support for the SPY. And then if that breaks, then 387 is on the table. And that is just going to be ridiculous. So at the moment, we have to be bearish. The entire market, there's no reason to try to catch any bottoms. There's no reason to try to scale into any calls until we break above major levels of resistance. I'm talking about major levels of resistance intraday for scalps, as well as major levels of resistance on a daily time frame. So say, for example, we're trading down here around 400. There's absolutely no reason to be bullish again in terms of swings until we break back above 411 to 415. I'm telling you this right now. Everyone has to be bearish on the market. There's no reason to try to buy dips. There's no reason to do anything. Just only buy dips when we are very, very overextended to the downside. As we saw here on Monday, as well as on the 27th, we opened outside of the lower level of the Bollinger Band both days. And it was an amazing opportunity to go long. Unless something like that happens, there's no reason to try to catch any falling knives. Okay? So I hope you guys understand that. So there's that for the SPY. Let's go ahead and take a look at the IWM. So whereas the SPY was holding the 411 area, the support down here, the IWM already broke it. And it looks like 179 is on the table for the IWM. Very, very weak. The MACD is moving upwards. The IWM is falling already. We can see the clear weakness here. So yeah, man, just be careful. The IWM is clearly very bearish as well. We need a close back above 188 to even begin to start like hoping for a bounce. But again, everything is really, really bearish. All eyes are going to be on the FOMC meeting on Wednesday. And to be honest, there's not much else to look at on the IWM. Let's go ahead and take a look at the NASDAQ. So the NASDAQ now looks terrifying. So number one, we didn't fall as low as we did compared to the IWM, but we did break below the lows. That's fine. But now the thing that looks most frightening to me is the MACD indicator. So we can see the MACD indicator is clearly falling. It's clearly crossing upwards here, more closely than the SPY and the IWM. Yet the NASDAQ had a very, very red day today, right? So the indicators are showing bearishness. But the other thing that I want to show is that the NASDAQ had a negative 4.5% day. Historically, every single time the NASDAQ closes more than negative 4%, the next day is always a bounce. So this is going to be the main reason why I think that the market, the NASDAQ in general, should close green tomorrow. Not given, I mean, it's not an automatic thing. Obviously, that can be broken. But every single daily candle that I've ever seen on the NASDAQ that has been down 4% or more, the next day has always been green. We've always closed above the prior day's close. So that means that tomorrow, statistically, we should close above 313.25. Those are two main reasons. The weekly SPX and the daily QQQ is giving me some bullish signs for a Monday rally, and it's possible. So, you know, yeah, man, take that into consideration. Statistics are on our side. And I mean, just look at how overextended the market is now. So obviously, you know, what's going to end up happening now is retail is going to be very, very bearish. Retail missed out on a lot of this move to the downside, and retail starts piling into a bias after the move is basically already like started or it's done. So just look at back in history, whenever anything was like rallying, all throughout up here, people didn't want to become bullish. One green candle, 2, 3, 4. No one wanted to become bullish until we got to like, okay, you know, FOMO. Now I really want to become, and then like once people became bullish over here, the market ended up tumbling. I feel like this is going to be the same concept intraday, like short term, because right now, like there's nothing that is going to keep the market up until the FOMC meeting happens on Wednesday. But from a technical bouncing standpoint, tomorrow should be green. We should be closing above 313. 313.25 on the NASDAQ tomorrow, statistically speaking. And yeah, man, looks pretty good. So yeah, man, there's my analysis for the entire stock market. I hope you guys enjoyed today's video. Make sure to like, comment, subscribe, do all that good stuff. And of course, just keep me in your prayers. Make sure I have a very uneventful, normal week, normal month moving forward. And it is, yeah, man, we're going to have an amazing time. And thank you guys for all your support. I will see you guys tomorrow. Thank you.